So I promise this is a video about investing in stocks and what I'm doing in the market, but I want to make a bigger point here right off the front of this video that I think needs to be said, okay? So we're living in a society where no one really listens anymore. It's very, very rare when you can find folks that actually listen nowadays, unfortunately. And I think the reason this is, I think is partially to blame, obviously, because of social media and what folks prefer when it comes to social media. And so given this environment we're on now, right, where it's all about what's the next video, what's the next clip, right? Think about the platform that's taken off like insane over the past 2 years. A platform named TikTok, where it's all about quick videos and swiping and like, oh, what's the next video? Oh, what's the next video? What's the next video? And so I think as humans, I think we're actually losing our ability to actually listen to somebody and process what they're saying. And we're very quick to make judgments about what they're saying, make emotional decisions about what they're saying, right? And we live in definitely a society that is very favorable of cancel culture. Obviously, nowadays is something that goes on. We like to box people in as fast as possible. Oh, they're this, they're that, right? Oh, they said something that's slightly negative about Democrats, so which means they're anti-Democrat. Oh, they said something that's slightly anti-Republican, so they're anti-Republican. And it's like, we're living in this kind of a society right now where folks are just unfortunately forgetting how to actually listen to somebody and actually paying attention to the details that are going on. And instead, we're very, very, very caught up into this dopamine, society now, where we just want the quickest thing and just and the next thing and the next thing and the next thing, and we want this like dopamine hits in our brain constantly. And it's unfortunate because the ones that will make the most money over the next 100 years will be the folks that can actually listen and put in work. Those will be the folks that will make the most money. The folks that are getting caught, their brain signals are kind of getting caught into this trap of just not being able to listen to anybody anymore and just make quick, emotional, rash decisions, right? Without any context or really, really deeply listening. Those are the folks that will be ultimately left behind in the end. And it's unfortunate because those are the type of folks that won't even probably see this video. And so that's unfortunate, but it is what it is. I think it's important that everybody that just heard that message there, you spread that word out there because, people are going to fall into that trap, and it will be the next kind of crisis, in my opinion, that will end up going on, and people won't even realize it. So with that being said, the reason I bring up this, and I think it's an important point to bring up here, is definitely sometimes I can see wrong impressions of like how I am as an investor. And I want to speak for a moment about how I'm investing in the market, why I'm positioning myself certain ways. And I don't think a lot of people, unless they're really, really like pay attention to what I'm saying and what I'm doing, I don't think that many people have really caught up to what I'm up to and kind of what I'm planning for in the market and how I'm actually investing. And sometimes I see folks that will make judgments like, oh, you invest this certain way, or you only look at these crazy growth stocks or something like that, or you invest super risky or reckless or whatever. And, sometimes I think, I'm just like, unfortunately, they're not listening. They're not listening, and they're not actually paying attention to what's actually going on here. And if they actually listened a little bit, they would realize, oh, he's actually making very strategic moves here and here. So let's get into this, guys, okay? So the first thing is, I want to kind of explain my investing process in this video, how I'm positioned, how I'm going to position my portfolios and things like that, in hopes that this can help folks understand a lot more deeply about how I invest in the market. So first thing to understand is I own around 20 stocks, okay? I think technically it's 21 stocks. So I am not one that invests in just goes all in one stock or two stocks or something like that. I actually own quite a few stocks. Some of these stocks are growth stocks. Some of these stocks are hyper growth stocks. Some of these companies are value stocks. Some of these stocks are dividend stocks. Some of these companies are profitable. Some of these companies aren't profitable. It's a mixture of different companies I own. But, the days where Jeremy way back in the day would just invest in like 3 stocks, 4 stocks, 5 stocks, those days are a long ago, nonetheless. And so I like to be actually pretty darn diversified in the market nowadays. Not so overly diversified where I could just buy an index fund or something like that. But, for me to hold 20 stocks with the type of money I have in the market, I feel pretty darn comfortable. I feel like that's like a kind of the rightish number for how much I have in the market nowadays. There are 9 stocks that I hold between 6 figures and 7 figures in. 9 stocks. So nonetheless, like I have a significant positions in a lot of stocks, like a lot of stocks. I'm not the type that just goes all, nearly all in, a few stocks or something like that. And I definitely see folks on the platform, and there's no hate to them or anything like that. But I definitely see a lot of folks that wrap up 80 to 90%. Like if you actually listen and you actually pay attention to how they're positioned in their portfolios, they're 80 to 90% invested into like one stock. Okay. And so if that just continues to go great over time, amazing, right? But as we all know, like if you are all in one stock, right, and just something goes wrong there, you're obviously devastated. Your account's very, very devastated. Now, some people like to go back to billionaires, and a lot of billionaires made their fortunes from their company, right? Now, the difference between running a company as a CEO and getting rich that way and investing is they didn't get there by investing in that company. They owned a huge chunk of that. They had a ton of equity because it's their business. They could control that business, right? Jeff Bezos didn't become one of the richest people in the world because he bought Amazon stock. He became one of the richest people in the world because he was a co-founder of, a founder of Amazon and had a ton of shares, and the company grew and he could control the fate of that. Elon Musk didn't get rich because, he was just out there buying stocks, something like that. He had massive equity in Tesla. He was a CEO. He ran that company, right, and ran it to the top. So it's very different when you have no control as a shareholder versus having control as like a CEO or something like that, right? And so that's very, very important that you understand that. So that's why, especially nowadays, I have a lot of money in a lot of different stocks. And I would say probably by the end of this year, I'll probably have 15 stocks that have six figures or more in it by the end of this year. So, that's how I actually like to invest. It's not like I like to go all in one stock or something like that. And when you actually start to pay attention to the numbers I have in these stocks, you start to see like, oh yeah, that's how we invest. Okay. Next thing is no stock I hold represents more than 10% of my net worth. No stock. I don't care what it is, Tesla or Tattooed Chef or anything, nothing. And like I said, I invest differently nowadays than I used to. Back in the day, I would have 30%, 40% of my net worth tied in one stock. It's different for me nowadays. And I would say I'm the least risky Jeremy investor I've ever been at any point in my life, right? I'm also older than I've ever been at any point in my life. I'm 32 now, right? I got 3 kids. I'm at a different place financially than I've ever been, right? And so when those sorts of things happen, you're not as likely to, I don't even think in terms of like wealth preservation necessarily, but at the same time, when you start building out big positions in several different stocks, you begin to get a little more diversified, right? And I know that, personally, people that are, have 70%, 80%, 90% of their net worth tied up into one stock. And once again, I think that's an ultimate level of risk. And me, I don't even have 10% of my net worth tied up into any stock. Okay. I think that's very, very important to understand. The most of my net worth is tied up in the stock market, but that's diversified across a lot of different stocks from a lot of different sectors, a lot of different industries at different growth rates, at different valuations, right? The next thing I want to say is only 2 of my stocks have weak cash positions. All my other stocks all have very, very strong cash positions. For me, balance sheet is very, very important. And anybody watching this video, definitely value balance sheet. We've been in a time period recently where money has been very flush and it hasn't been hard to get capital, right? Those time periods don't last forever. And eventually you start going through a tough time. You can go through a period, whether it's months or even potentially years, where liquidity really dries up. And when liquidity dries up, those are the sorts of moments that you need to have a strong cash position for your business. So you can expand your business in a bad time. So you can keep your business, can keep your workforce in a bad time. If you are not in the right capital position as a organization, you are destined to fail in a tough time, right? One of the things I remember I learned from Steve Wynn a long, long time ago in a great interview, he said the number one most important thing, and Steve Wynn, in my opinion, is one of the greatest businessmen I've ever seen. He said that essentially the most important thing for a business model, and I agree with this, is its capital structure. A business without a proper capital structure is a business that's, teetering on going under, essentially, right? And so me as a shareholder, as a person that likes to buy companies, right, whether they're profitable, unprofitable, it doesn't matter to me. I want a strong cash position. And if you don't have a strong cash position, then there's probably not a very high probability I'm going to even consider your stock, right? The high majority of my stocks all have strong cash positions. And like I said, it doesn't, here's the thing. A lot of people think it's only if you buy an unprofitable stock that you need a strong cash position. No. Because even a profitable company can go unprofitable, right? I just brought up Win stock. Guess what happened to Win? Win's an incredibly profitable business model, right? Then all of a sudden, they had to close down because of a once-in-a-100-year pandemic. And then next thing you know, where's their profitability? Boom! They're taking massive losses. But you know what Win had? A great capital position around in that company. And so when you think about this, think about not just the good times, but think about the bad times. And whether you own a profitable or unprofitable, make sure you're buying companies that have good cash positions. I like to see a lot of my companies have about a 10% of their market capitalization in like cash. So for instance, if it's a $3 billion market cap, I would love them to have like 300 mil, if not more than 300 mil in cash. That's an incredibly strong position. Not all companies are going to have that, just so you know. 5% is still really good, but yeah, anything over 10%, that's incredible, okay? That's absolutely incredible if you can find those sorts of companies, right? Debt. As far as debt goes, debt's not as much of a concern as it once was. And the reason being is most of these companies have taken out debt, if they have taken out debt, at insanely low interest rates over the past few years. And so, obviously you should still watch debt levels on companies, but it's not as important as it once was. Now, think about this. If interest rates go to 7%, 8%, something like that, let's say years from now, then it's a whole different situation for companies that take out debt in the future. But for most of these public companies out there, their debts are at like 2%, 3%, 4% type interest rates. Very, very low. And so debt's not as big of a concern as it once was when interest rates were obviously much higher in the past. The cash is actually extremely important. Next thing I want to talk about is most of my big positions are needs-based companies. Like if you really start to break down like what I'm investing in, food companies, basic necessity companies, like basic products that you need, like you can't get by without. If I think about like payments, I think about a company I've been buying recently, like PayPal, right? The stock's fallen dramatically, and I've been picking up a lot of shares. They own the number 2 and number 3 top finance apps in the entire world, right? In PayPal and Venmo. Payments is something that's still needed regardless if you're in a good economy, bad economy, anything in between. A company like a Facebook, I don't care what happens in the economy, people are still using Facebook, Instagram, WhatsApp, and that still is the premier place that you have to advertise as a company, right? And you start really going through these companies, and you'll find out the majority of stocks that I invest in are actually a little more needs-based companies. And the reason being is when I look at it, I'm definitely concerned about a possibility of a slowdown, right? Kind of going in this year, I felt like it's kind of like a 50-50 if we're going to have a recession this year. And so when we're in that sort of environment, the type of companies I like to stay away from are anything that's not needs-based, right? So if I think about like, investing into like, why haven't I been buying Tesla stock? Because Tesla doesn't sell needs-based products, right? It's not like you need a $100,000 SUV or a $50,000 Model 3 or something like that, right? It's not a needs-based thing. And if you were in a tough economic time, that's a company that people will cut back on along with everybody else in the automobile sector, right? And so I even look at companies that have been tearing it up, like companies that make things like ATVs and jet skis and things like that, and they've been just kind of going through a boom cycle, and I'm kind of like, those aren't the type of stocks I'm really looking to get in right now. And the reason being is I'm kind of like, I think, as far as the economy goes, I think there's going to be a lot of question marks on what happens here. The economy is very, very strong right now from what I've seen in the real world, but inflation. If we talk about the real estate market and potentially a major real estate slowdown, there's a lot of jobs in the United States of America that are supported from real estate. What if those roofers that are putting up all these houses left and right aren't quite getting those calls starting in 2023, right? What if those realtors that are making bank right now because houses are selling a snap of fingers and they're making those commissions left and right? What if those deals aren't quite going through now and they're sitting on properties for weeks, months, or the properties aren't moving in general? Think about all the indirect jobs from that. Think about the mortgage companies. I've already heard a lot of layoffs from a lot of these mortgage and refinance companies because refinancing is dying in a massive, massive way because everybody already pretty much refinanced and now interest rates are skyrocketing up. So if you had a job that was dealing with refinancing of properties, a lot of those folks have said, bye-bye, we don't really have the need for that. So I definitely think it's a time period we're going through where there's a lot of question marks. In that sort of time period, I definitely like to invest, right? And invest pretty aggressively in stocks that are very, very beaten down, because I like to invest in a fear-driven market where you've got a wall of worry kind of up, and I like to invest heavier. But with that being said, I'm investing in specific stocks that are usually very, very beaten down, that have long-term growth ahead of themselves, like growth year after year after year after year, regardless if the economy slows down, is great, is bad, is okay, is good, is horrible. I'm investing in the type of companies that will grow regardless and sell the type of products that regardless, you're going to be using those sorts of products. And so that's kind of the way I like to structure my portfolios. And I think it's very, very important to understand the way I'm structuring my portfolios, the way I'm investing. And this is a way I plan on investing for the rest of this entire year, essentially. Much of my investments are going to be focused on more needs-based products, companies like that, that have good cash positions behind them, that are beaten down dogs right now. And that's where I'm really, really focusing my capital for basically the rest of this entire year. And then after that, I'll adjust and I'll see kind of what's going on and what I expect in 23 and beyond. But that's the way I actually like to invest. And I thought this was a video worth doing, and I hope you guys learned a little bit from this. And I appreciate you joining me as always. Also, FTX, thank you for always being the official crypto partner of my channel here. Check out the first link in the description down there if you want to sign up for FTX US, buy crypto and NFTs with no fixed fee. So if you're looking to get in that game or you're already in that game, definitely check out FTX. And right now they got a deal where essentially your first $10 of crypto, you get a free coin. So that's pretty darn cool. Much love as always, and have a great day.